Tell us whether you're risk on or risk off at this moment.
I'll give the same answer in that we're risk on, but mine is a different definition than Moshe's market. Look, we started the year in the leveraged finance market with both the same macro concerns around where's the consumer going, what's inflation, are we hard or soft landing, et cetera. But we also were carrying around a lot of self-inflicted wounds with hung deals from the prior year, which I'll touch on a little bit later. And so we had a longer ways to go. And this year hasn't been a straight line, but my market's in a much better place when it was earlier in the year. And a lot of that was a slow bleed. Q1 was a little better, Q2, Q3. And where we sit today is a technically sound market. But what I would say is the investors who are, coming into the deals we're bringing, they're still very credit focused. And on any given day, they're in, some days they're out. And so you see that in the spreads and the yields. If you look at where the high yield market started the year, it was just under 9%. It's trading in the mid 8s. That feels high, but it's good to see that come in a little bit. It's been fighting a treasury that's up 50, 60 basis points. So the real way to judge my market is the spread, the credit spread. That's what an investor is willing to take for that dollar of risk. And that's come in 100 basis points in the overall high yield market. So investors are willing to buy something earning a lot less today, and that speaks a little bit to the health backdrop. On the leveraged loan side, you've seen a similar story. We started the year, selling things at deep discounts. 92, 93 was the dollar price on most loans we were selling. Today, that's 99, 99 and a half. We'll shop a deal in the 98 range. So it's definitely normalized, which is good to see. And then some of the backdrop, you mentioned fund flows, the CLO vehicles, which are like 70% of my loan market and really the engine behind the loan market, that's begun to issue CLOs in volume, and then especially in the last quarter. So we're in a good spot now. I'll say risk on. If you ask me next week, I may say risk off because that volatility, I won't be lying today because the volatility is going to come and go, and we're kind of pick your day, and the story could be different, but the trend is our friend.